Welcome back to Lamb's Cryptoverse. Today we're going to talk about part 3 of our Bitcoin production cost. If you haven't watched part 1 and part 2, please do so now before watching this because this video puts everything together. So let's get started. So in part 1, as you know, we discussed a bird's eye view, a top-down information. And that information was more reliant on charts. And in part 2, we discussed almost like in between top-down view and the bottom-up view, meaning we looked at things to consider, like including from what we discussed in part 1, like the hash rate, ASIC prices or chip prices. But we also considered total cost, and this comes from looking at bottoms-up view. And today, we're going to discuss putting it all together and trying to determine what Bitcoin's floor price or bottom price could be in the next quarter or two from information on production cost. So first, we're going to consider whether Bitcoin prices can fall or not. And my answer is yes. And there's a lot of way of predicting the floor price or any price of up price or down price of Bitcoin, but you have to have a framework. People use DMARC indicators, moving averages, and so if they're looking at moving averages, they're bullish now because Bitcoin price has been going up. But what I do is I have a framework of what the market could do, not just the Bitcoin and crypto market, but equity prices, and then I see what's affecting Bitcoin the most. And right now, as many as you know, the Bitcoin and cryptocurrency prices are correlated with S&P 500. So then I looked at my forecast for S&P 500, and I think there's going to be a regime change. There is already a regime change. And if you look at this chart here, the bar chart, you see that on the left side here, maybe I should circle it. Right here, you've got structural change. I think that's what we have here. We've got a structural change or regime change, meaning that we have a period of the Fed tightening liquidity and interest rates are rising. So if rates are rising, liquidity is falling, that's really a structural change. And the average decline over the last few decades during that type of change has been 60%. S&P has fallen 60% from its high. So if that could happen, I think this time around we could definitely decline at least 50% from the high. So the high of this bull market was 4,800 for the S&P. So if the high was 4,800, we're looking at another, believe it or not, another 35 to 40% decline from today's recent prices. That's a big decline. So as I said, Bitcoin is correlated to S&P 500, at least for the time being. People are saying it's not correlated, it's going to be a safe haven asset, and I believe that too, but not today. Maybe 3 years from now. But today, I think Bitcoin has a beta with the S&P 500 of at least 1.5 or maybe even up to 1.7, 1.8 times the S&P 500. So if that happens, we could see a sharp decline, another sharp decline in Bitcoin prices of about 50 to 60% from where we are today. So another way of calculating the bottom, the floor price for Bitcoin prices is looking at production cost. And I think production cost could go lower. This is because we haven't seen a sharp decline in the difficulty rate, hash rate, or even ASIC prices. These all could come down. Now, I said that production costs could decline and Bitcoin prices could decline. What I think we need to consider is how elastic are production costs. I think production costs can decline, but they're not as elastic as they seem. And this is what I mean. I think Bitcoin prices could decline sharply, but the production cost will decline at a lower rate than the Bitcoin spot price. Then we need to consider certain things. Like I think many of you know, everyone's talking about this merge where Ethereum moves from proof of work to proof of stake. And I have a question. How is that going to affect production costs? Are there going to be rigs or ASIC chips being dumped on the market? And if they're dumped on the market, with higher inventories, that's going to cause ASIC prices to go down and production costs to go down of Bitcoin. But my question to you is, can Ethereum rigs or chips even be used to mine Bitcoin? I don't think so. I mean, maybe the GPU chips can be used, like those chips made by NVIDIA and AMD, maybe they can be used to mine Bitcoin. But remember that Ethereum rigs are probably using ASIC chips that's specific just for mining Ether. So I'm not sure if that's going to affect the market, but it's something to think about. 2, ASIC price is also going to be affected by slowing gaming revenues. Remember, during the COVID of 2020, there was a stay-at-home trend where everyone was staying home, watching Netflix, playing video games, but that's no longer the case. People are actually going out now and doing stuff. So because of that, we have some higher inventories in gaming chips. And NVIDIA said they were seeing lower outlook for their chips and higher inventories. Remember, NVIDIA is trying to distance themselves from cryptocurrency. So I think gaming revenues, when they say that, that's like a code word for crypto. So that's definitely the case where we're seeing a slowing in NVIDIA's chips and building inventories. We're also seeing a slowing of Intel's chips, AMD's chips. A lot of companies have said that chip inventories are building up, despite of car companies saying there aren't enough chips out there. So we're getting a cross current of information. And generally, in my next point here, point number 3, generally ASIC prices tend to decline with Bitcoin prices. And you're seeing that from Bitmain's Antminer. Those chip prices are expected to decline. Bitmain, in case you don't know, has the largest share of all ASIC chips out there in the world. And oddly, Bitmain is a Chinese company. And it's odd because the Chinese have banned cryptocurrency mining from the country. So it's kind of oxymoronic to see that. And lastly, it's something else that could affect Bitcoin production cost is that miners can operate underwater due to inventories of Bitcoin and cash on their balance sheets. So when I say underwater, I mean that miners can operate unprofitably. They could lose money. So let's go to the next slide to expand that. So what I did is I looked at the balance sheets and cash flow and income statements of all the major mining companies. If you just focused on balance sheets, they're not stressed at all. They have lots of Bitcoin in the balance sheet. Here, maybe I should highlight this one, Marathon. And if you look here, they have cash on their balance sheets and they have what they call digital currencies. And digital currencies, Ethereum, but it's mostly Bitcoin. So that's what they mean by digital currencies. And then they also have digital currencies that are restricted. And I don't look at that because those are restricted because maybe they have it against a loan or something like that. I also looked at cash flows. They're negative, but they're not at distressed level. And I'm going to show you that in another slide. But for now, I want to talk to you about the quick ratio and current ratios. If you look at current assets versus current liabilities, they look good. And over here, I've shown current assets. They're pretty high. I don't have current liabilities, but if you look at current assets against current liabilities, they are good. So let's go to the next slide. Here are the cash flows that I mentioned. Cash flows are negative, but they're not at distressed levels. Now, if you're thinking about investing in Hive blockchain because that's positive cash flow, don't even think about doing that. That's an anomaly. And also, what Hive blockchain was doing is mining for Ethereum. They do a lot of that too, so their cash flow looks better. But remember, Ethereum mining is going bye-bye. So don't think about investing in high blockchain for now. So here, when rubber hits the road, this is what I'm looking for. I think that we're going to see a bottom in Bitcoin prices when production cost per Bitcoin exceeds that of the Bitcoin price. And where is that? It's in that pink area. I'm going to circle it right here. This is that pink area right here. I'm guessing, I'm forecasting, which is just a guess, right? That the production cost of Bitcoin will decline to about $13,000, maybe by October. And at that point, I think Bitcoin prices could decline to about $10,000 because of what I said earlier. So at that level, it's going to be tough for miners to keep producing Bitcoin or even stay in business for a few months. Remember, they can stay in business for 1 or 2 months because they have lots of crypto on their balance sheet, they have cash, but that can't stay for a long time. That's only going to be a temporary time. And one last point here is when I say production cost, I'm not just looking at direct production costs like electricity. I'm also including depreciation because mining companies, they have rigs that have short useful lives. And they need to continue spending on bleeding edge technologies. And plus they want to present to investors their incremental production cost. And the only way to do that is to keep investing on the most efficient Bitmain Antminer ASICs out there. Let's go to the key takeaways now. So again, I think based on production costs, that Bitcoin could bottom around $10,000. I think this may occur around October. And above is based on production costs surpassing Bitcoin's spot price. It's also based on Bitcoin's beta with the S&P 500. And it's based on production costs declining. And there's a whole host of other data supporting Bitcoin prices at 10,000 or even above. There's Bollinger Bands, there's DMARC indicators, Fibonacci. As I mentioned, there's moving averages, the sentiment, right? If Bitcoin goes down to 10,000, there's going to be a lot of negative sentiment, and that could be a buy right there. And also, lastly, we didn't talk about it here in this video, but there's something called stock to flow, and that's basically the inflation rate of Bitcoin. And it's also related to the halving cycle. In May of 2024, we're going to have another halving cycle where the rewards to mine Bitcoin get cut in half. And all of this data put together tells me that Bitcoin cannot go below $10,000, $11,000. So thank you all for listening. I hope you'll listen to part 1, part 2, and part 3 of this Bitcoin production cost video series. And if you like what you've seen, please hit the like button and subscribe, because this is how I can continue making more videos. Thank you, and I'll see you again. Bye.